Dale and he's from BlackBull Markets. Happy New Year 2022 to you all. Wishing you good fortune with your trades this year. There are a lot of opportunities to be had as the markets are expected to be moving, especially out of those ranges we've seen recently. Now, central banks are a key factor, of course, this year, as we see a lot of them start to increase rates, and that's a key driver of the market sentiment this year. What we are seeing, though, is economic impacts from the COVID government spending and COVID-related economic activities start to take toll in 2022 and in 2023 next year as inflation rises and interest rates start to rise. Today, massive CPI data release print from the US, 40-year high, 7%. That's higher since 1982. A bit higher than expectations. We saw the dollar dive today off the back of that. Indices are up. Stock markets continue to rally in the USA, and gold had a bit of a tick high up to the 1820 an ounce level. The chart I'm looking at, though, behind me is the pound yen. Now, the pound's been the pick of the FX pairs since the year begun. Now, that's, of course, with a lot of traders focusing on how they're handling the COVID outbreak out in the UK, getting on with things, and we're starting to see a bit of a slowdown with the Omicron spread out in the UK. As well as that, traders are confident about the Bank of England's movements with raising rates, as we saw at the end of December with the first rate hike, and plans for more monetary controls throughout the early part of this year. So confidence around the Bank of England's movements have helped the pound really take control of the markets, and pound bulls, which were, of course, sitting at very ominous levels as the year ended. We've now rallied 5% on the pound yen from year beginning to current date. That's 12 trading days into the year. We struggled, though, to get past that 157.50 level. We're down about 0.5% on the day, forming a double top since the year began at 157.73. So we could see traders continue to test those highs. However, nothing takes away from that big rally we've seen over the last few weeks. So as I said, 5% gain in the pound against the Japanese yen. Now, the Japanese yen, of course, highly correlated to what's happening with the US dollar, and of course seen as a bit of a safe haven, so a bit of risk-off trading going on at the moment. What we can see on this daily time frame, though, is a break of 157.73 does put into play this high at 152.64, which was the high that we saw in 2021 October. Of course, markets rejected that. However, strong momentum continuing in the pound, sentiment to continue to be positive, could well see a break above to the 158 level, which will be really interesting for traders, because once we look at the high time frames later on in this video, we'll see there's not much room there to the left in terms of resistance for the markets to take it a bit higher. But let's break down this recent high that we're seeing around the 157.50s, and to show you how we could potentially see some struggle to get to the upside, considering our RSI is now around the 70 mark. So traders could see this as an overbought cycle. However, if we drop to the 4-hour time frame, we can see this pattern formation here, noting from the daily chart the previous high on the 6th of Jan, and now pushing towards those highs at 157.73. So the struggle to break up there is what we're currently seeing in the markets. But if we're breaking this down, we can see markets finding some sort of range here. And what you should be looking at as a trader now is how you can play this range. Well, if it breaks below 156, you're looking at a potential support area of the 155.10s. And then again, of course, you've got a nice support at the 154.10. So a lot of ranges to be played on the shorter term time frames. However, if you're looking for a move back to the top, you potentially want to see a retest back of 156 or 155.60, a test of that zone, and to see what the impetus is around here for buyers and the sentiment to buy back the pound, considering the economic data we've seen to take back of that resistance, that high at 157.73. And then again, of course, as we saw in the daily time frame, 158.50s is the next top to play. So definitely the pound is to the upside, momentum is strong, nothing really in the way of stopping it, especially following that CPI data. If we look at the weekly time frame, we'll finish off here, and what we'll see if we just zoom out a tad, we'll just see what we're looking at to the left. Now, as you can see, ever since 2016, we've pretty much been below the 158s, 157s. There was, of course, a lot of volatility around this was around the Brexit, initial Brexit vote, where we saw a swing from just shy of 160 to a low of 117 a couple of months later, and that brought about a range-bound market, or markets operating within that range for the next respective 5 or 6 years. And now we're starting to break out of this multi-year range. We could see a new wave higher in the pound yen, of course, signified by this key support just shy of the 149s, and then of course the top of that range sitting about where we're trading at the moment, just shy of the 160s. Now, a break of 160s could bring about higher prices in the pound yen, all the way heading up to 171, 176 here. As we can see, if we look to the left, back in 2015, that's where the pound yen was operating. And of course, if you know the pound yen, it really does move. So when it wants to kick into gear, we could really see the pound start to hit those 165s, 170s pretty fast. As we've seen in the past, the pound does like to rally against the yen or decline respectively, but it is a fast moving asset. 200, 300 pips in a day is not unheard of. So what I would do, look at the higher time frames, eye out your zones to the upside. Do note that if you do get a break above 157, 158, you're looking at 160, and there's nothing stopping it from the left from heading even higher as you're breaking out of that multi-year range. However, on the flip side, if we start to see this overbought condition play into part, we could begin to see the range come back again, and we'll be looking within that. Give us a bit of space here within these zones, 155, 150. So what we're looking at within those 500 pips, if we do get some resistance play out at those 158s, then you're looking short term within there to play. However, it is all there to get. If you're looking for more pound movement to the upside, you could well see it in the near future. Anyways, that's it for me. I wish you all the best of luck with your trading, and we hope you continue to enjoy our video content. All the best from BlackBull Markets.